The FDIC announcing it's completed the sale of IndyMac Federal Bank to One West Bank. This after agency chairwoman Sheila Bair called for increased regulation of the nation's financial institutions in Capitol Hill testimony yesterday. Will this translate into more power for the agency, and what kind of ground is the FDIC standing on? Joining us now from Miami is Randall Waterfield, CEO of Waterfield Financial Services. Randy, thank you so much for being here. But first and foremost, the health of the FDIC. As a depositor, talk to every depositor. The FDIC is backed up by Uncle Sam and the federal government, so our deposits are safe.
David, that's absolutely correct. And we get this question from customers in our call center at Waterfield Bank on occasion. And there hasn't been a loss from an FDIC-insured account since its inception in 1933. And again, the FDIC is backed by the full faith and credit of the U.S. government. So there is no risk to consumers' deposits.
I want to know, though, about how the AIG managed itself during the boom years. I read a report recently that said the FDIC collected no insurance premiums from most banks from 1996 to 2006. So based on that, at least, it seems like the FDIC was believing that everything was just hunky-dory as well with the nation's banking system, along with people on Wall Street, people at home, and everybody in the government.
Yeah, the FDIC functions much like insurance functions. So while there's $4.7 trillion in the deposit market, the actual amount of reserves that the FDIC has is a certain subset of that. What's been in the press recently is that those reserves have been depleted with the resolution of IndyMac and other failed institutions. The way those coffers are replenished, however, is by assessments levied on the banks. In addition to that, the FDIC has lines of credit and so forth with the Treasury as well. Currently, those are about $30 billion. Before Congress is a bill to increase that to about $500 billion.
Did the FDIC, do you agree that we let banks get too big? Because again, you run, no offense, a smaller bank, but was the FDIC also party to letting these institutions get too large?
Hey, it's certainly no offense taken. We think a small bank is the right place to be at this point in the market. But no, I think the purpose of the FDIC is to increase confidence in the banking system. Banks and so forth, their growth is really restricted by their levels of capital. And capital is driven by equity raises in the capital markets and also, of course, earnings. So the FDIC's role is really not to limit the size of the bank that's capital driven.
Will banking never be as profitable again, though, with even higher FDIC insurance premiums or fees? And again, that's just going to get passed on to banking customers everywhere.
Yeah, Dagan, I think that's absolutely right. While actually spreads have increased in the banking business, certainly banks with legacy loan issues and so forth, their profitability has decreased. But on a go-forward basis, it's our sense that profitability will increase. Now, what does that mean to the consumer, though, in terms of increased assessments from the FDIC? In some way, shape, or form, those assessments will indeed get passed along to consumers in the form of lower interest rates on deposits or higher interest rates on loans.
It was really good to see you, Randy. More ahead, and we'll come back and we'll talk about your business and just the reaction of depositors and how that's holding up. Randy Waterfield, CEO of Waterfield Financial Services. Good to see you, Randy. Thank you so much.
Thanks, Ian.
We want to bring you some more news.